Top three things on my notebook this morning. Number one, the euro versus the dollar. Number two, the Russell 2000. And number three, we're going to hit on China. So first on the dollar versus the euro versus the dollar versus the yen. It's all a gigantic trade going the same way. But again, we're getting what we would call an immediate term trade exhaustion signal on the downside for the euro if it in fact touches $1.28 again. If the dollar index gets anywhere close to this 85 level, and again, you have an event, so watch out for this event this week. Of course, the Fed event is the event on Wednesday, and I don't think she's going to be as hawkish as this market is. So again, the market is hawkish. In other words, the market is now long of interest rates and long of the dollar, and they're bearish of the euro. So again, if you think of that in those terms, ahead of this date, if it goes the other way, it could go the other way in a hurry. Second point would be the Russell 2000. You know, a lot of people continue to argue with whether or not it's a stock market bubble. Unequivocally, in small cap stocks, the answer was yes, and the key word there was yes. So again, the Russell 2000 topped on July the 7th at 1208. It's down 4% from that point. It's also down two of the last 2 weeks. So again, that would not be a good thing if you're bullish on small cap stocks. So again, we continue to be bullish on anything that looks like a bond, so stocks that look like bonds, which would include utilities and REITs. Again, we added utilities to the investing ideas last week on the pullback. There were plenty of pullbacks in things that look like bonds in equity land last week to buy. Please do not buy the Russell 2000. That would be a preferred hedge. Darius is laughing here. On the short side, again, housing, Russell 2000, and regional banks. That's your short selling opportunity. Go back to the wood. Now, finally, China had actually bad news, kind of on the margin, just a little bit of a slowdown sequentially versus last month on industrial production numbers. But again, this is key to the Chinese story, don't forget. That provides the stimuli. Now, again, if you look at the headlines after the report, is that you get the stimuli, and the Shanghai comp closes up on the day. Shanghai Composite Index now up at fresh year-to-date highs of up 14% for the year-to-date. So if you're not buying utilities and you're not buying REITs, then just buy China. We like that too. We have that obviously on the long side of real-time alerts via the FXI. And those are your top three things.